disco because his life is too short. That means nothing without the mighty disco. The holy of all holies. The Alpha and Omega. Oh glory, disco. Ah! I hope you guys doing wonderful. I hope you're doing fine. I hope you're doing wonderful. Love to the whole world and a happy Thanksgiving. Oh, thank you guys. Thank you everybody. Oh yeah. Okay, please before I start, subscribe if you like if you like, do whatever. Just be nice. Don't be passive. Okay. So the most important thing today is one thing: efficient market theory with all its variation. I've been in the market for years and years and decades, as a matter of fact. We understand this fact. The market always discounts the future, but now it's not discounting the future. You know why? Because the market is infested, no offense, by individual investors, retail investors. These people that just follow the news and they charge. And that kind of action does not last for long. And usually it ends in tears. I've seen that in Y2K. I've seen that in many markets. Okay, the market knew about all these vaccines. And usually the market only follow the easy way, which is the reopening, all that stuff, at the time of distribution, not the time of accumulation or just regular buying. So who's buying now? Retail investors. When they gonna stop buying? Until they run out of money. How long? No one knows. In the past 6 to 8 months, I really don't know what's gonna happen this time. So if it's too good to be true, it's too good to be true. I've never seen something like that. Like, the trade should not be that obvious, should not be that clear. You don't buy Hilton International now because you know the world is going to be okay very soon. This, you should have bought it long time ago on the speculation that the world is going to be okay as a smart investor or whatever, a smart person. So not now. I hope you understand this concept. So just discussing that concept, you know there's something wrong. The market does not act this way unless it's time of distribution. Capisce? So understand the efficient market theory and how it works. Good deal. Let's look at the charts. Let me start with the VIX. Okay, this is the VIX. What do I see at the VIX? Something Maybe bullish is the price memory, and this price memory is offered support for years and years since 2018. So this zone, okay. So the last 2 days, a quasi hammer, a quasi inverted hammer, in the daily time frame, in Japanese candles. Good deal. Another thing, bullish divergence, low, lower low, low, higher low, even though it's oversold. This is bad. That means the strength is very weak. So this is bad. But I'm just looking at maybe there's something's gonna happen. So price memory and two bullish candles. This is really not a hammer, nor this is an inverted hammer, because you have to have the body has to be 3 times as big. The wicks has to be 3 times as big as the body. But nevertheless, it's bullish. Okay, so this is the VIX. All right, let's look at the mighty dollar, the mighty king. What's bullish about the dollar this is an amazing price memory that lasted for years, and you could run it on your own time, in a weekly, in the monthly. You will find demand at this area. And last time you visited this area, you had a gigantic. This is huge in the currency market, from 91.75, the low, to almost 95. In very last time, it's almost less than a month. So this is big. Good deal. What happened here is big. So you had an impulsive wave, then a consolidation in the form of a bull flag, then you have a measured move. Now there's nothing. There's no consolidation, nothing. The only thing that is very bullish now is the bullish divergence, and it always worked in the past. So we'll see if it happens this time. So what's bullish about the dollar? The bullish about the dollar is the price memory, bullish divergence that worked in the past all the time. All right. So this is the put to call, the equity put to call. So what's bullish about this stuff? 100% of the time, every time you have a bullish divergence between the stochastic and the price action for the put to call, you had an impulsive wave up, which means inversely related or inversely correlated with the Dow, which means a possibility of a sell-off. And you could run it on your own time, and you could see that. It's not a coincidence. It worked 100% of the time. So you could run on your time. Nobody knows the future. All right. So let's locate the Dow. This is the 4-hour time frame. We have a divergence, multiple divergences. As a matter of fact, you could look it up. In the past, you have a high in August, and a higher high in September, and you had a bullish, bearish divergence in the MACD and the stochastic, and you had a flush, a really in a healthy market. That was a big deal. But our market is not healthy because of the retail investors. I'm really sorry if you are a retail investor. You are the cause of all these problems because you use your emotions. So it's to me, this is time of distribution. It's not time of accumulation. And it's what's screwing the market. It's retail investors, not even hedge fund managers. Even though I'm not very. I don't look positively on some institutional investors, but mostly. Unfortunately for the retail investors. So, okay, so what we have here, this is a 4-hour time frame, by the way. Okay, you can look at it here. Okay, this is a high during the time of the vaccine news, the Pfizer, and you had another high, an all-time high, in 24th of November. That high is not confirmed at all in the stochastic, nor was confirmed in MACD. What happened in the past? Just look it up yourself. Always something bad happens. And in addition to that, you have a bearish crossover in stochastic. Usually, you would have some kind of a retracement. So when you had this bearish crossover in the stochastic in a 4-hour time frame, you went down from almost 30,000 to 29,000. This is almost 1,000 points in a healthy market. That was a big move in less than a week. Okay, good deal, beautiful. So what are we looking at right now is this one. Let's look at the daily time frame. The daily time frame now is the same thing. Bearish divergences everywhere. I don't have to run it for you. You could know. So bearish divergences in daily, the many multi-time frames, and efficient market theory. Please remember that. And it's not, the market does not work that way. The market discounts the future, does not go up because of happy news. At the time it goes up, it's the time of distribution. And I wish you guys the very best. And I wish you to like, if you like, subscribe if you didn't subscribe, and disco, and rise to the mighty disco, and that goes forever!